Hello, in this lecture, we're going to define interest. According to Fundamental Accounting Principles, Wild 22nd edition, the definition of interest is charge for using money or other assets loaned from one entity to another. When we're thinking about interest, we're usually thinking about that charge for the use of money, meaning the purchasing power of the money being loaned from one entity to the other. While that other entity has the purchasing power of that money, the interest is being charged, similar to rent. Let's take a look at an example first, comparing this to a situation where we are renting a house. We have the landlord, we have the tenant, we have the house. The house is being used by the tenant but owned by the landlord. As time passes, then the tenant is going to owe the landlord for the use of that house, and of course that's what the rent will then be. This is straightforward with the use of the home because we can see the home, we see the use over time, we're consuming that usage over time, although the house always belongs to the landlord. The same thing is true when we have a loan. In essence, we have money going from, let's say, the bank to a business owner. The business owner is getting that money, they're spending that money, they're using that money during a certain time period in order to help generate money. So they're consuming that money, using it in a similar way that we would use, say, a home or a building in order to do whatever we want to do. If it's a business, it's to help us generate revenue. Over time, we're going to then repay that money. Depending on the time that we've used it, we're going to have to pay for basically rent on that money. And that means we're going to have to pay back the $10,000, but we're also going to have to pay back the rent. So just like we're going to have to give back the house, we're going to have to give back the $10,000. And we're going to have to pay for the usage, the purchasing power that we had for that time period. That's going to be the rent. That's going to be the interest in this case on the money that we had usage of.